Hello traders, you are welcome back to the Forex Geek channel. In this video, we are going to be discussing one of the most powerful chart patterns that you can use in your trading, and that is the ascending channel pattern. Okay, if you want to improve your market analysis and make better trading decisions, then stick around until the end. Do not forget to smash that like button and subscribe for more high quality trading content. Okay, so let us get right into it. What exactly is the ascending channel pattern? Well, the ascending channel pattern is actually a bullish price action structure whereby whereby the market forms higher highs and higher lows. All right, it's a bullish market structure whereby higher highs and higher lows are being formed. All right, whereby higher highs and higher lows are being formed, moving within an upward sloping channel. All right, so when you have an upward sloping parallel channel, formation of higher highs and higher lows within that channel, that is what we call an ascending channel pattern. Okay, so the upper trend line acts as resistance while the lower trend line acts as support. So traders usually use this pattern to identify potential entry and exit points within an uptrend. Okay, if you can spot an ascending channel early, it gives you a clear roadmap for possible price movement. But before you trade it, let us talk about how to identify it properly. Okay, so spotting an ascending channel is simple when you know what to look for. All right, here's how. First of all, you identify at least two higher highs and two higher lows. Okay, all right, you identify at least two higher highs and two higher lows. So in this case, we have a higher high here and we have another higher high here, right? And then we have a higher low here, and then we have another higher low here, right? All right. So once you have identified two higher highs and two higher lows, you draw a trend line connecting the swing highs and the swing lows. All right, a trend line that will connect the swing highs and then another trend line that will connect the swing lows. Okay, so if the lines are parallel and sloping upwards, you found an ascending channel. So confirm the pattern with indicators like moving averages, RSI, or volume analysis to get a stronger signal. Okay, once you have identified the pattern, the next step is knowing how to trade it effectively. Okay, there are three main ways to trade the ascending channel pattern. All right, the first is buying at support. When the price touches the lower trend line, it often bounces back up, right? So traders look for bullish confirmation signals before entering a long position. So you can watch out for bullish candlestick patterns, rejection candles and all of that around the support. So if you get a confirmation around the support, you can go ahead to enter your buy trade. Okay, then another way to trade this pattern is to sell at resistance. The upper trend lines acts as a barrier. So when the price reaches this level, traders may choose to exit their positions or wait for reversal signs. Okay, so if you're in a buy trade, you can exit your buy when price gets to the resistance trend line, right? Or if you are a scalper, you can even decide to scalp from the resistance to the support. Okay, but if you want to be on the safer side, you might just wait for a pullback and then you enter another buy in the direction of the trend. Okay, then another method to trade the ascending channel is the breakout trading. If the price breaks above the upper trend line, it signals a strong continuation of the uptrend. On the other hand, if it breaks below the lower trend line, it may indicate a trend reversal, just like what happened around here, right? Like what happened around here, a breakout below the trend line, signaling a possible, reversal. And you can see what happened around here, right? You can see what happened around here. So understanding the ascending channel helps traders to make informed decisions, right? Avoiding random trades and focusing on structured price movements. Whether you are a day trader, swing trader, or long-term investor, mastering this pattern can help you improve your market timing. Meanwhile, even when trading the ascending channel pattern, ensure that you always observe good risk management as well. For example, if you're entering a buy trade, ensure that your stop loss level is below the previous swing low. Ensure that your risk to reward ratio is good enough. For example, 1:2. Maybe if you're risking 10 pips, you can be targeting 20 pips minimum for your profit. All right, and ensure that you get confirmations before entering your trade. Okay, even if it is a reversal trade that you are counter trend, even if you're using a counter trend trading strategy, ensure you always have a good risk to reward ratio as well. It is very, very important. Okay, so if this video helped you understand the ascending channel pattern, make sure to hit the like button and subscribe for more trading insights. Let me know in the comments if you've used this pattern before. In the meantime, thank you for watching and I hope to see you in the next video. Happy trading.